Are you interested in buying a home and you're a self-employed business owner? Well, in light of some of the stuff that's going on in our world and our economy today, there are a few additional steps that are now required for you to go through in order to qualify. Hi, I'm Charlotte with Birch & Cedar Realty Group. Eric Leigh from Guaranteed Rate and I sit down and chat about those additional steps in today's video.
Hi, everybody. Hey, it's Eric Leigh, Vice President of Mortgage Lending and a producing branch manager at Guaranteed Rate in Meridian, Idaho. And I'm joined here today by Charlotte Jean. Charlotte, good morning.
Good morning.
Hey, guys, this is our Let's Get Real About Real Estate. We're coming to you about 2 times per month. We're pretty new on doing this, but we're going to say a couple of times a month with something that's new, an update on the real estate market or the mortgage front, with something that we feel is going to be really important for you to know and be updated on. So we're going to do some quick and brief introductions about us. So I'll take a quick start. So my name is Eric Leigh. I'll just make it easy. I'm a husband. I'm a father of 4, including twins in there. So yeah, my life is busy. I'm a native Idahoan. And when I'm not out backpacking or reading, I like to eat sushi. So that's me. I've been in lending for about 15 years with a mortgage broker, 2 community banks, and now a nationwide retail lender. So I've seen it across the gambit from different ways to help people purchase and refinance mortgages and feel like I bring a good amount of experience to help share with you on this. Charlotte.
Hi, I'm Charlotte. I'm with Birch & Cedar Realty Group, brokered by eXp Realty. I am a transplant to Idaho about 5 years ago. I am a mom and a wife. I have 1 son and 2 giant dogs. So we have a St. Bernard and a Great Dane. I've been in the business a little over about 3.5 years. And, I specialize in using digital technology to help give my clients a competitive advantage. So that's a little bit about me in a nutshell.
Yeah, awesome. Well, today we're going to come to you and we're going to talk to you a little bit about some mortgage guidelines that have changed recently in what we're calling the new COVID world. So sometimes I refer to that as the COVID fog, but we're going to talk about some changes that have come up. I'm going to let Charlotte lead off for today's session, though, because she's going to share with you a little update about what's happening in real estate, hence the Let's Get Real About Real Estate. So Charlotte, why don't you take it away?
Thanks. So really what I wanted to start off today is some good news. So the National Association of Realtors put out a report that talked about the top states that had the strongest job recovery, and Idaho was on that list. So let's just take a quick look at that. So Idaho had, can you see that, Eric?
Yep.
Okay. So Idaho has 3.5%, and that represents 24,300 jobs. So that's pretty exciting. I mean, it's primarily in the leisure and hospitality industry, but we are seeing strong recovery so far, the strongest job growth. That's, great news. So we wanted to start there. And then, Eric, I know that there's been a lot of changes in light of, all of COVID in a lot of different areas of our lives. And one of those has to do with mortgages. And I know that there's been some changes in how strict things are and kind of the process and stuff. And I think it would be good to go over how that affects business owners. So did you want to go ahead and take over with that?
Sure. Yeah. Why don't you turn off the screen share and we'll get into that a little bit, Charlotte, because it is really interesting what's happening right now. And this is the thing, guys, a lot of people aren't realizing how drastic some of the underwriting changes, have been in light of COVID. And we'll keep calling the COVID fog for lack of a better reason. So what's happened now because of COVID? And you have to think about the big picture here. Governments in just about all states at some point during this epidemic have literally come in and shut down businesses. Shut down. You are not allowed to go out and operate and do what you do to earn a living. So if you think about that from a mortgage underwriting standpoint, that becomes a huge problem, because when we're talking about trying to put people in mortgages that they qualify for, full documentation qualify for, that disruption of income has to be accounted for. We can't ignore it. And Charlotte, you and I were talking about this yesterday. The first thing that I want to start out with and make sure everybody understands here is the way that we're looking at this is not as if it was a one-time thing. We are looking at COVID, and let me define we. We is Fannie Mae and Freddie Mac, the largest conventional mortgage aggregators in the country. So we are looking at COVID as an ongoing thing. Now, depending on the area of the country you're in and what state you're in and how your respective government has responded to this, you may feel like it's over. Like in our area in Idaho, Charlotte and I are both in the Boise, Idaho area. We have seen mostly a reopening. In one of our counties, Ada County, there has been a little bit of a scale back on some of that, but we're largely open. If you go to California, if you go to New Jersey, if you go to some of these other states, they're shut down and closed and not the same as us. So depending on where you're from, you may feel like, hey, this is over. It's all done. We're out of it. Fannie and Freddie strongly disagree. This is going to be an ongoing thing until further notice. Charlotte, I don't know if you've talked to any of your home buyers about that at all and what they say. Do you have any thoughts from what people have shared with you around how they feel about how COVID's impacted them or the economy and where they're at?
Well, I mean, it is kind of 50-50 with the people that I talk to. You know, some people it has really affected them and some people it hasn't. It just depends on, you know, what industry they're in, what they do for a living. I know for us, it's kind of affected. We have our son in preschool, and because they're a private accredited one, they actually just instituted the mandate of masks. So he's 4 and he's going to be wearing a mask at school. So that's a little bit different. And you know, everybody is handling it different and feeling different about it. And some people it affects more than others. So it's just kind of all across the board.
Right. Well, to what we were talking about then, and what I want to make sure everybody understands here is the biggest changes that we've seen within mortgage underwriting in the COVID world is with regard to business owners. So I'll take you back in time just a little bit to what underwriting looked like pre-COVID, and then we'll talk about what it's like now. So if you're self-employed, and it depends also on the ownership percentage of the business, and I'm not going to get into the weeds on that, Charlotte, but in short, what we have to do is we have to collect either 1 or 2 years of personal and business tax returns. Now, again, how many of those years we need to get, it depends on the borrower. So we're not going to get into that. 2 years of tax returns at most, and we do an income analysis of that. But now in the COVID world, what's different is we have to get a couple of months of bank statements with which to do a cash flow analysis. And here's where the biggest problem is going to come in. So let's say that you're a sole proprietor. You know, you have a service that you sell or a widget that you make and sell or whatever, and you run all of that through what's called a Schedule C on your personal tax returns. How do you keep track of your business expenses? There's a lot of people that I know and have talked to, they just have a personal checking account, the same one that they go to, you know, buy stuff from Amazon on for personal use, the same things that they go to Albertsons or Winco or whatever grocery store and buy their groceries, the same thing they pay their daycare expenses out of, and the same thing that they run their business income and expenses through. In this world today, the COVID world, that is going to be a nightmare in underwriting, because what we have to do now is we have to look at this business bank account, which is not just a business account for some people, right? It's your everything account. Now we have to go through and we have to audit that and have you tell us which expenses and which deposits are not business related. And you have to be able to support that. Now, sometimes it's going to be pretty easy and very clear. Like if you take your kids to Nature's Childcare and they automatically debit your account every week for X amount of dollars or once per month or whatever it is, it's pretty clear that Nature's Childcare is not a business expense, right? So some of those we can eliminate right away. But if you think about all of the things that might be running through that account and having to go through and try to figure that out, it's going to take some time and it may be very, very hard to do. And you have to understand that the underwriter cannot assume. They cannot jump to a conclusion that this expense is not business related. You have to support and document to show that it's not business related. Inside of that also, what we're going to do is we're going to go and find non-recurring expenses and non-recurring income. Like let's say you just got let's say your air conditioner went out because it's flipping hot right now, right? And you had to spend $8,000 with the HVAC company to replace that. That's clearly a non-recurring expense. So you're not going to have an $8,000 expense every year or even every month. That's a one-off thing. So what we're going to do is ask for you to help us identify those that are non-recurring and bring those out as well. So if you think about some of those things that I just outlined right there, it's going to be a lot more work for self-employed borrowers to get approved, especially if you don't have a business bank account that you funnel and run all of your business revenues and expenses through. If you have a catch-all checking and savings, let me be very clear here. I am going to strongly encourage and, in fact, implore you, run down to your bank or credit union today and open up a business account and start separating those right away, because it will make your life miserable in underwriting if you don't. And I don't want to sound all doom and gloom, Charlotte. I really don't. We can get through it. But as I talk about that example there with the person that does everything, it could be much more difficult than it otherwise is going to be. So
yeah, exactly. Yeah.
And again, where people decide to start doing that, I mean, here's the thing. When do you need a mortgage? I mean, sometimes we plan house purchases, but sometimes people, spur of the moment, something comes up like, maybe we should do that. These are some things that you just can't snap your fingers and all of a sudden get done. You have to plan for those. So, Charlotte, when you're talking to your buyers and prospects and people that say, hey, I'm ready to buy a house, or hey, I'm moving there from California, and you knew they're self-employed, these things coming up. These are things we really need to bring up to our home buyers sooner than later. So I don't know how you can work that into conversations or how you want to share that with our audience here and how that normally happens, but it's going to be really important for us.
Well, especially in light of what's going on in the housing market right now in general. I mean, we have in Ada County 1 month of supply, and we're seeing more homes go under contract than we are seeing homes coming on the market. So it's just going to get, be harder and harder and harder. So if you are thinking about it at all, you need to be very well prepared. And so as a business owner, if you're self-employed, you need to go through this process and have time to vet all of this stuff out before you're actually ready. Because if you go out looking and you find a house that you love, it's going under contract in less than 24 hours in a lot of cases. So you need to take the time ahead of time to be prepared. So if there's something that you can do, that you might want to buy something even 2 years from now, there is no harm in getting your business account set up and having it separate, because that actually just makes a lot of financial sense anyway. So, just whatever you can do to be prepared for the long run, whether it be now or in 2 years. So.
Yeah, completely echo everything you said 100%. And to what the point is that you were making and alluding to, your CPA or tax preparer might appreciate you a little bit as well, instead of, hey, here's my shoebox of receipts, right? Exactly. Let's start separating that a little bit more. Charlotte, before we wrap up, you just started touching on something that I really want you to come back to just a little bit for our audience, because again, I feel like there's a little bit of a disconnect with the reality of the inventory levels in our markets. Now, certainly real estate is hyper-local, and I'm not going to step on your toes and your turf here because I don't watch the numbers and the stats like you do. But in talking to professionals like you as much as I do know the inventory levels are not, they're not, shall we say, ideal right now. So can you share with everybody just a little bit about the reality of at least our home market where we're at, and maybe some other markets around the country that you watch? Because I think it's a thing that people are kind of disconnected on.
Yeah, I mean, I think that overall, the national levels say that there's about 4 months of inventory that's available. But here locally, and that's a balanced market. 4 to 6 months is a balanced market. It's not sellers, it's not buyers, it's totally balanced. But here we are in Ada County, we are at a month of inventory, and we are seeing homes. Like I'm working with a client right now, and every single time we look at something, and it's not in a starter home, it's in about $450,000, $500,000 price range. It's still only lasting on the market 2 days, 5 days. I mean, it's going under contract really fast. So we just don't have the inventory to keep up with that buyer demand. And I just want to also add that Forbes did an article in May that said that Boise, Idaho had one of the strongest, they did the top 10 list of cities with the strongest economy to help get out of coronavirus. And Boise was on that list. So we do have a strong market, as we are seeing jobs come back on. We had 24,000. We're also seeing the rise in homeownership rates. So nationally, I'll just show this one other slide. Sure. Now this is the home ownership. There we go. Are you seeing it now?
I'm seeing it. Thank you.
Okay, so this home ownership rate is actually the percentage of the U.S. homes that are owner occupied, and that rate's calculated by dividing the number of homes that are owner occupied by the total number of occupied households. So we are seeing that home ownership rates are going up. I mean, it's 2.6% in the second quarter. So we're seeing that home ownership rate go up, and it is consistent with seeing more homes go under contract, more homes, closing. So we're seeing the activity there, and it's encouraging. It's kind of frustrating for those buyers that are out there because they're looking and things are going so fast. So going back to what we've been talking about, if you are looking, you have to be very well prepared. Get that pre-approval letter, know exactly what you're looking for, and write a strong offer, because it's a really tough market right now if you're a buyer. Now, if you're a seller, you're in a good place because things are flying off the shelf really quickly. So if it's priced correctly, you're in good shape. So
yeah, that's great. We'll wrap up on just one last point, because I want to make sure, because I know that people are going to have questions about this. What I talked about with the difficulty for self-employed borrowers and the documentation with the, needing the business accounts and all of that. It feels a little frustrating. I understand that to somebody who's in that situation, but the numbers, you have to realize how bad this has been on the economy, how bad the COVID fog has been on the economy. I mean, we are talking about right now in terms of continuing claims. We have 30 million people in this country that are on what we call a continuing unemployment claim. And that simply means they filed for unemployment more than 1 week ago. So if you filed for unemployment in the 1st of June and you still haven't found a job, you are continuing to be on unemployment. That's what that means. 30 million people. And if you take that and divide that into the number of people that are actually available to work in the workplace, that's an unemployment rate, if you take just that number, of about 20%. So it is a massive drag on the economy when you have that many people out of work. So the reaction that Fannie Mae and Freddie Mac have had to this with this documentation, I can't say that I'm surprised because of how bad this has affected the American workforce. So I wanted to leave it on that just to help kind of circle back those high level numbers. So, okay. All right. Well, Charlotte, any other parting thoughts or anything that we should leave with our viewers before we end for this session?
No, I mean, it's a very unique time in our society right now. So it's the housing market's, doing really well. We've got a lot of mortgage applications, I know, but it is kind of scary, unique time in our lives. So
yeah, boy, understatement for sure right there. Scary unique is a good way to put that. Okay, everybody, we'll go ahead and wrap up on that. And again, expect to see Charlotte and I back at least a couple of times a month with another market update and a little tidbit or something that you need to know about mortgage or housing. One thing we'll ask as a favor from all of you, if you can, if you've watched this video and you've found some value from it, hit the little like, hit the little love, hit the care thing that came up through COVID. But especially if you know someone that you think might benefit from getting this content, just click on the share and tag them in it, or just make a comment there that we can get back to you some more information on. That really helps us to make sure that we can get this message out to as many people as possible. Because again, if you watch this video from start to end, this is information that self-employed people need to know right away. So we just appreciate your help and support in watching this. Again, tag, comment, like, love, care on it. We appreciate all of your help. So thanks so much for tuning in today on the Let's Get Real About Real Estate. We'll talk to you guys next time.
Bye. Thanks.
Thanks. Bye-bye.